Hi everyone, today let's talk about the NVIDIA conference. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So NVIDIA announced their newest set of GPUs as they were expected to, and they said they're going to need a bigger GPU for you JAWS fans out there. But in real talk, they did announce their new Blackwell line of chips, and those are expected to ship later this year, so everything that we got we kind of already expected. We knew that we were going to get a new set of chips. The more interesting thing here is that they did mention that they want to become more like Microsoft and Meta, indicating that they want to be a platform style company, and that would definitely be a break from the current model that NVIDIA has. So right now they're really focused on hardware and some software that supports the hardware, but if they were to branch into these larger platform style companies like Microsoft and Meta, that would be a big expansion for the company. As a result of these announcements, they did fall by 1%, so markets were a little bit unimpressed. And then they mentioned here Blackwell is not a chip, it's the name of a platform. So a little bit of mixed messaging there, probably not helping markets understand what it looks like. And then they show Meet Blackwell, the successor to Hopper, and then they show a chip. So again, a little bit confusing, hard to understand what they are saying. Is it a new chip? Is it a platform? Is it both? And then you can see here some of the details. The Blackwell GPU combines two separately manufactured dies into one chip done by Taiwan Semiconductor, which is a combination of 72 Blackwell GPUs. So again, everything looks good in terms of their next set of GPUs, and I'm sure there will be massive demand for these as they have already seen for their previous set of chips. And then in terms of cost, you can see they cost between $25,000 and $50,000 per chip, and a whole system can cost as much as $200,000. And then getting over to that subscription model that we talked about earlier, you can see here their new product is NIM, and it's going to cost about $4,500 per GPU for a year of licensing. Seems like they're trying to extract more money. Again, we'll see how it goes and if this ends up becoming the platform model that they talked about, but right now it is just talk. Moving over to fear and greed here, you can see we actually stepped up by 1 point yesterday. Friday was a 71, today 72. Markets ticked up a little bit higher here today, nothing crazy. Strength actually went a little bit lower, even with markets, and then breadth continuing to trend down here. We'll take a look at the breadth charts later. Put call ratio back into regular greed, volatility hovering right here in that 14 area. Safe haven demand, regular greed, it's been there for a couple of days now, and then junk bond demand still in extreme greed. Moving over to seasonality, we were expecting a little bit of a bounce based on seasonal trends. The 15th is typically the low of the month. You can see that here. When it comes to election years, and then we see a bounce and sideways chop, and sure enough we did get a little bit of a bounce. It wasn't as aggressive as what you see here, but it still was a little bit of a bounce. So right now seasonality intact, sideways chop to slightly bullish for the rest of the month. I think the only risk to that is the FOMC this week. If they say anything crazy, that could absolutely crush markets, but right now this is intact. Moving over to CPI for the Eurozone, you can see they did come in line with expectations. So inflation ticking up a little bit. You can see previous read here, minus 0.4. This month 0.6, and that's what we got. So a little bit concerning there, inflation going higher even across the pond. And then looking at Tuesday, basically nothing on the calendar. 20-year note auction, fairly interesting. And then Wednesday, don't forget we do have the FOMC in the afternoon. It is in the afternoon, so if you hold anything into the end of day Wednesday, that's not going to get affected until the afternoon. So you can shift your positions if you need to. But obviously the FOMC is going to shift markets around a lot, and it is currently expected for them to pause. Speaking of FOMC, let's take a quick look at the Fed futures. You can see here it is a 100% chance that they are going to pause at current levels. I don't know if I've ever seen a 100% chance, but there you have it. Supposedly 100% chance that they're going to stay at current levels. May, basically 100% chance we're going to stay there. And then June, this is the first time we are still at a potential cut. I don't know if it's going to happen. It's almost 50-50 at this point, whether we're going to see a cut or not, but that is absolutely the soonest. Really, for me, I think the first cut is going to take place in July, and you can see the highest probability is still that 5 to 5.25 range. If you get the cut in June, that would mean we're getting a pause in July. And then if you look at September, the highest probability is 2 cuts by September, so that would mean one in June or July, and then the next one here in September. Remember, the Fed's talking about 3 cuts, so it's certainly possible that that could happen, but just keep this in mind, June or July, and if it does happen in July, maybe even push that September out to the November meeting, and you can see 2 cuts here by November is still the highest probability, so anywhere between June and July, and then September, November, going to see 2 cuts based on current probabilities. Moving over to max pain, you can see it's currently sitting at 512, which is currently just $1 or so below current prices. 1.2 million options, put call ratio below 2. But look how bearish this is. Tons and tons of calls in the markets. 515, 520, 525, and 530. All massive call walls. One put wall here at 506, which would be over 1% of downside potential. Bottom the calls all the way down at 502. I don't know if we'll get to finish that low, but anywhere below 515 down to 506 makes sense, and probably between 506 and 510, so about 1% of down move in my opinion for the Friday session at a minimum, and I think it could be even worse if we don't get something positive from the Fed, which I'm a little bit concerned that we won't. Finally, moving over to the charts here, starting off with the S&Ps, you can see we did have a really strong spike pre-market. Early in the session, topped out, pulled back to the trend, ended up holding that during the session, chopped sideways after hours. And then you can see it here in the daily chart, continuing to hold this structure, broke it on that Friday, which was concerning, gapped right back into the trend, 9 EMA at 513.11. So technically we are below the 9 EMA still, momentum bearish RSI, below the SMA, still tons of volume here relative to what we had been seeing. So still waiting to see if we get the follow through. I still think we're going to see some bearishness, especially based on what we're seeing in max pain and the FOMC coming up. But right now, like I said, still holding the structure. We'll see if that level holds. Moving over to the Tasty charts here, you can see this is the daily chart, and we are still well above that 21 EMA. Touched it on Friday, gapped higher, holding above that 8 EMA, which is at 512.35, and that is pretty much right where we finished. You can see volume on the day was still decent, but we did see that volume-weighted MACD start to roll to the bull side a little bit, so that was interesting. And then looking at that hourly chart, you can see we did get a switch on the ATR stop. We've been going back and forth here on the hourly chart for a while. You can see it's been chopping sideways. Let's look at it on the 4-hour. 4-hour is still showing bearishness. So on that dip into the Friday, we took out those ATR stops. So right now, still technically bearish. And you can see volume weighted MACD also still bearish here on the 4-hour chart. So mixed signals for sure, with the longer time frame still showing some bullishness. Moving over to the Qs here on the hourly and the daily, you can see similar thesis, rallied super aggressive, hit this trend line, the one we'd been watching here, just a short-term one, rejected from that level, tested 438, hit that trend line again and then broke back down. Got the 21 EMA on the hourly chart, 436.82. That is an important level. You can see we're holding it here after hours. If that breaks down in the pre-market tomorrow, that's going to be quite bearish. And this was more aggressive of an up move than I thought we would get. You can see 0.82 to the upside. Momentum still bearish. RSI still pretty weak below that SMA. On the Friday session, we did just barely get below that 50 line, and we're back above it here. So still holding a short-term downtrend. Just looks like an upswing to that point. And if this trend is going to continue, the next price target should be 433.24. And we'll see how that plays out right now. And we'll see how that plays out. Understand that the Qs do go ex-dividend tomorrow, so we'll see how that affects price as well. Moving over to the Tasty charts, you can see we're still in this range. It's been sideways chop for a while. We got here around mid-February and we are still here around mid-March. We did get down to that 34 EMA on the daily chart, still bullish on the ATR stops. Momentum still bearish on the volume-weighted MACD. And then looking at that 4-hour chart, you can see still bearish here on the ATR stops, which is currently sitting around that 442.50 area. Momentum still bearish here, just like the SPY. It did get back above that 144 EMA, but if it gets back below that, your support would be down around 431.50 or so, which is a pretty substantial down move. And then let's look at that hourly chart. ATR stops back into bullish territory, sitting around 435.20. Momentum not really confirming it on the MACD. You can see lots of those, and you can see that last candle of the hourly chart was a pretty substantial step up in volume, and that was a bearish candle. So we'll see how it plays out, especially with NVIDIA not really delivering stellar information in their conference. Moving over to the Russell and the Dow, you can see nothing's really changed here. Momentum on the Russell continuing to trend down, bearish on the day 0.57, engulfed the Friday candle, Next level of support, 198.75. RSI below the 50 line, below the SMA. Everything says this is bearish, at least to that 55 EMA around that 198.57 area. And then moving over here to the hourly chart, you can see we hit that 55 EMA. Touched that just for a second, then broke down pretty much the rest of the day. Seemed like it was going to potentially hold these lows, and then we ended up finishing just a little bit below them. After hours, not showing much of anything. Pretty interesting there. And then moving over to the Dow, we saw that break on the Friday. Ended up positive here today, 0.19, right at the level again, 387.77. So right there, waiting to see if we get back below it. Momentum and RSI both say bearish to me, and we are below all of those short-term EMAs and SMAs, as well as the VWAP. Moving over to the MAG7, really nothing has changed here. We did gap higher, 1.55%. You can see we did get back above the trend line, but that was kind of expected. You can see we're holding this higher low at the 21 EMA, rallied up, holding above that longer term trend here, and then we're back above all the EMAs and SMAs, so structure is still intact. Momentum and RSI definitely showing a little bit of weakness, and it is down a little bit after hours with NVIDIA falling on their news, but we'll see how this plays out tomorrow. Nothing really changing, just a slow grinding uptrend. Moving over to Apple and Tesla, we said Apple looked pretty strong. It was still holding that 170.90 level, and you can see it gapped way higher today. The high of day was 177.71, which was all the way at this trend line, so that is a relevant trend line, and you can see 176.15, that's important as well. Hit VWAP, hit the 21 EMA, and then rejected down, closing at 0.64. Momentum bullish, RSI still bullish here in my opinion. Might see a little bit more pullback, higher low setup, and then rally, but it's had a pretty decent base, slightly higher low already, gap higher and rally. We'll see if it pulls back, holds another higher low, and then pushes up, but this continues to look okay. Understand that it is still a downtrend, so there's a potential that this could just retrace and fall even further, but right now the indicators show a little bit of bullishness and a potential counter-trend rally. And then looking at Tesla, they did raise prices on their Model Y in Europe, and that started to drive prices a little bit higher, so 167.34 is the level. Got right to that 9 EMA at 172.80, closed about $1 above it. And you can see momentum taking towards bullish, RSI breaking back above the SMA. I was looking at this as a bear flag setup, and I still think that is still viable. Might just see a little bit of a retrace and then a bigger breakdown, but you can see it here. Big move down, bear flag, broke out of that. We'll see if this continues lower, or if that news can catalyze Tesla a little bit higher. And you do have to respect big impulses like this. 6.25% is a strong day, even for Tesla, and it certainly could have some follow through. Moving over to Meta and NVIDIA, you can see Meta was up 2.66%, got back above 489.67, tested that level, and then bounced momentum rolling towards bullish, so that could be an indicator that we are going to see a resurgence here on Meta. Pretty interesting. And then looking at NVIDIA, you can see it was also up 0.7, gapped higher, tried to rally, didn't really show any strength. It's been sideways chop here going back to 6 March, and you can see that lower highs each time. The lows have been generally flat, and you can see it is falling after hours on their news, which was not super convincing for markets. It does seem like this is set to go lower. It is below all the EMAs and SMAs now after hours on the hourly charts. Not a super bullish indicator, and you can see we've had moments of this before. We ended up rallying out of that, so this is still a very strong stock. I'm not saying that it's going to break down super aggressively, but it is a little bit of a weak indicator. Moving over to Pepsi and Google here. Pepsi had a massive day, up over 4%. Look at that candle. Gap higher, rallied, super aggressive, above all the EMAs right now. Not quite above that 200 SMA at 173.20, but they did get an upgrade from Morgan Stanley, pricing them into around $190 per share, which would be a super aggressive move from here. That would bring us back to the highs of July, which definitely seems attainable. And honestly, it's pretty surprising that we got down all the way into the 150s. And even a move from here to there would give you about another 11 to 12% of potential upside from current prices. So Pepsi seeming like an opportunity. And I've talked about them before. They looked pretty good as they continued to show some decent moves higher. But then we got this most recent dip low with a lower low versus these relative lows. Still technically higher than that October low, but Pepsi has been underperforming, and it does seem like it might be set for a bigger move here. And then Google got some news on their with AI that they're going to be working with Apple, and based on that they went up 4.44%, hit that 150 price target after breaking 143.82 on the Thursday session. Didn't have any follow through, went lower on Friday, but then after that gapped higher. I was really looking for a test of that 21 EMA down around 140. didn't give us the opportunity, and you can see that volume was building here, so somebody knew something was going to happen. And then we got the news announcement here today, got all the way up to 152.88 or so, and I do think this is probably going to get back above 150.26 at some point. Even if we see a little bit of short-term weakness, that news with Apple could be very bullish. Moving over to staples and discretionary, as you can see, staples was down 0.09%, tested the 21 EMA, ended up closing still back above 75.40. Not super great, tested that trend line, broke lower just a little bit. Momentum bearish, RSI breaking down, so not super bullish there. Interesting to see that. And then discretionaries went higher with Tesla up 0.54, got back above this shorter term trend around 178.37, still below 180.10. I wouldn't be bullish until it gets back above that level, with resistance at that 21 EMA at 180.86. And then looking at the indicators, momentum and RSI both bearish. Moving over to breadth on the 20 and the 50, you can see we did get a slight bullish day on these. Nothing super convincing, and it did not change the direction of momentum. Just looks like a retrace, which would give you more potential downside. 51.75 current price target for the 20. And then looking at the 50-day average, 68.66 is still that level. If it breaks below that 21 EMA at 68.40, then I would expect more downside, but right now it is holding support. Moving over to yields on the 2-year and the 10-year, at this point I would expect yields to kind of hover in the zone up until FOMC. You can see current target here for the 2-year is 3 cuts. I think we'll probably see more than that over the next 2 years, but 3 cuts is what we're pricing in right now, so that makes sense that we're right there. And then the 10-year, 4.3, again right at resistance, and I would expect it to kind of hold in that level. You can see it's been flattening on the RSI on both of these. Momentum still bullish, but as you can see on both of these charts, it does seem relatively flat at resistance. Moving over to the dollar here on the hourly and the daily, you can see we had a bullish day, touched that 55 EMA, rallied right up to trend resistance and my level at 103.64. Momentum fading a little bit at that level, and you can see that longer term downtrend line still sitting right there in the 200 SMA and the 21 EMA, all of those things in that zone of resistance. Momentum on this says that the dollar is going to break higher, and that certainly seems possible, especially with yields hanging out and going higher a little bit. Obviously, this is going to be dependent on the FOMC, and if they come in relatively hawkish, I would expect the dollar to push higher. I do kind of think the dollar is going to push higher anyway, but obviously FOMC has a big input there. Moving over to bonds. Bonds did break below that 92.82 level here on TLT. J&K still doing nothing, still in that same range, but TLT's continuing to move more bearish. That's 8 days in a row of bearishness. Momentum bearish, RSI bearish. Yields continue to look slightly bullish, but we are at a critical point. Let's go ahead and extend out that trend line. You can see super important. 144 EMA also there at 92.50. And like I said on yields, it wouldn't shock me if we just kind of hovered here waiting until we got that FOMC statement. And then obviously that's going to push yields around, which will push TLT around. But based on indicators, this does look bearish. Moving over to the VIX, you can see this has been the slowest build in history. We've been building here since mid-December, slowly grinding higher on the VIX. And then we did pull back a little bit here today, just barely 0.55% after gapping higher. Momentum basically zero. RSI still slightly bullish, still holding a higher low here at the 9 and 21 EMAs. And again, this might just hover in this range until FOMC. Then we get a spike on that move, and then we could see this pull back all the way down into the more normalized range. We'll see how that plays out, but right now we are still slowly trending higher with no major spikes. You can maybe argue 13 February was one, but we immediately pulled back into the middle of the range, and that's where we've been trading. Moving over to my accounts, you can see I did manage to make a little bit of money. I did put on some positions here during the day, and looking at my positions, you can see I did roll out to 201 here for Wednesday on the Russell for just under $2 credit. And you can see it's even down a little bit after hours, so trying to collect about 1% on that. The reason that credit is so much is because the FOMC. We'll see how that plays out. And then looking at the Qs, I did put these shares back on. I was pretty patient about it. I waited until it pulled back to 438, so I didn't lose money on the day, which is better than I usually would have done on a day like today. So managed to make a little bit of money there. I had calls on for the day, which covered all of these losses on the shares. And then I sold a call here for tomorrow, 437 for $2.38. I sold it a little bit in the money, which ended up working out. You can see it's down a little bit after hours with that NVIDIA move. So protected all the way down to 434.70, 434.60 in that range. Trying to collect almost $450 or $60 on that position. And then looking at the poor man's covered call, similar thesis. sold to 437 again for tomorrow, pretty much in that same range. I did roll up during the session for that, up to 437, made some money on that call, which ended up working out quite well. And then, like I said, I rolled it out to tomorrow. Let me know down in the comment section what you thought of NVIDIA, or whether we will see lower prices over the coming days, or have we bottomed out for the month. Otherwise, like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.